Hello, this is Erin Swenlin from DecisionPoint.com bringing you your daily five, or I should say my daily five. I'm going to show you the five charts that I think you will want to know and look at during this week. So let's get it right started. Right after this, I'm actually doing a free trading room. I do them Mondays from noon to 1 p.m. Eastern. If you'd like to join me in the free trading room, just go to DecisionPoint.com. And on that homepage, you will see the registration link. So there you go. Our 5-month candlestick of the SPY. This is my go-to chart every morning. I looked at it as soon as I woke up today, and now I'm going to explain it to you. So what we're looking at is the 5-month candle for the S&P. Right now, I'm looking at a positive RSI above this net neutral 50 line. So that tells me that the SPY has been in the top half of its price range for the last 2 weeks. The only issue, of course, is it is a down day so far. We have price having hit the top of this rising wedge. And that happened, of course, Friday. And now we're looking at a little bit of a pullback going on right now. My price momentum oscillator, the PMO, is on a buy signal. So that's good news. And then the OBV, we can see, has been making these new highs. So as we hit the new all-time highs, we did see the OBV pretty much come up and set its own high here. When you see a breakout, you really want to see the OBV breakout as well. That's a great confirmation that the rally will continue. We also can see that the VIX currently is below its Bollinger Band on my inverted scale. The VIX, when it is very, very high in its reading, tends to be a great sentiment indicator. And when we get really high readings, that's oversold. So that's why I invert my VIX. So the oversold is on the bottom. And then when we see the kind of oscillation below the EMA, that tells me that there is weakness in the market, at least among participants. So makes sense. We're seeing a bit of an elevated VIX, especially when we're having a little bit of a down day right now. But what are the Swenlin trading oscillators telling us? What should we expect this week? These short-term indicators, of course, we came up with, Carl did at Decision Point. And there's our PMO buy signal, so that looks great. These readings are as of last Friday. So we were seeing a kind of some climactic readings here on our STOB, the breadth portion, and it is still continuing higher. And you can see that the STOB has now reached positive territory. So all of that is good. But the problem we had was that we have these negative divergences in place. And that means we have these declining tops, but we had rising tops, in fact, a new all-time high on Friday. So we don't like to see that. However, seeing this nice move in the STO to the upside, I think it does give us some opportunity to see some upside this week. Look also at our participation numbers, and I'm going to talk about that even more in my next chart. But you can see that as of Friday, we had 62% with their price above their 20-day EMA, which is acceptable, but it's not even 2/3. And we had made new all-time highs. So that was a little bit of a head scratcher. And we do have 71% with PMOs rising, meaning they have rising momentum. That's a pretty decent number. It's not overbought, really. It's kind of getting in that area of being overbought, but it isn't overbought just yet. And I think that does bode well for the market moving into this week, just seeing some of those numbers higher. But this is an important indicator that we've just really come up with recently. I mean, we've had the indicators for it, but we finally kind of put the pieces together to give us a assessment of market bias. So is the bias bullish or bearish in the short term and in the intermediate term? And you really want to know that bias because that's when you get those head scratcher days, right? Where the market goes up and you're kind of like, well, why did that happen? Well, there was a bullish bias. And so market participants were more likely to push the market higher than lower. And so that's what we're looking at assessing right here. And as you can see, we have these percentages. We have our Silver Cross Index, and that does measure the amount of stocks in the S&P that have their 20-day EMA above their 50-day EMA, meaning that as far as DecisonPoint is concerned, they are an intermediate term trend model, Silver Cross buy signals. So this tells you how many of them are on buy signals. This, remember, we talked about the percent of stocks above their 20-day EMA. We talked about there is the percent of stocks above their 50-day EMA. And then we have our Golden Cross Index here, which just tells you how many stocks are on a Golden Cross with their 50 above their 200-day EMA. The percent of stocks right now above their 50 is about 59%. That is higher than the Silver Cross Index. So that does tell us that we have a little bit of a market bias in the intermediate term it's a bit bullish. We have 62% of stocks with price above their 20, but only 56, 57% with these silver crosses. So that tells me in the short term, we also have a pretty bullish bias. So we need to keep that in mind. We are seeing the market pull back just slightly today. It's, at the point when I did this chart, it was only down 0.03%. So we're not talking a lot. So I suspect we're going to see higher prices until we get these indicators on the overbought side. So crude oil, I had to bring the crude oil chart because the energy sector is going crazy today. Last I looked, I think it was up over 2%. And so it was, I wanted to see, well, what is going on with USO? And I thought, well, obviously, right, oil must be going crazy because the energy sector is going crazy. And I saw that that wasn't the case. In fact, when I did do this chart earlier, it was at 0.26%. Going down. The nice thing is when I look at this chart, we were getting a really nice rebound after dropping and losing this intermediate term rising trend. We did recapture that with a move above the 50. And then by Friday, Thursday and Friday, we were above the 20-day EMA. Currently, we are also holding there. So we are down about 0.25%, but we're not seeing a whole lot of damage on the USO chart. The RSI is still positive. Yes, it's kind of, moving sideways now that price is moving sideways. But the PMO is trying to make a move to the upside. We don't have that buy signal, but this tells me it might be time to fish around in the energy sector for possible buys. We'll have to see how it works out. I'll be looking in my diamonds this week when I do my stock picks for my subscribers, and I suspect I might find some in there. My diamond of the week is actually a stock I picked last Thursday, Wednesday. I picked it on Wednesday. I was doing a presentation and I had done all of my homework for my diamond report. And I noticed that home builders were starting to wake up just a little bit. In particular, DR Horton was hitting my scan results. So let's take a peek at this chart and I'll explain why I liked it. Obviously, we're seeing a little bit of a pullback right now, but wow, perfect pullback right to the top of this falling wedge, which is bullish pattern. We also can see that positive RSI going on here. PMO is on a buy signal. It is rising. It hasn't gotten above the 0 line yet. That would be a really good sign. But again, we're trying to get in on this as early as possible. So you can see it was back here that I picked it. It had kind of a down day, but since then it's been doing fairly well. We're definitely higher than we were when it was picked. You can also make a case here for a double bottom, and today's action really is pushing it above the confirmation line of that double bottom. What's going on under the hood? Well, we know the on-balance volume told us that there's a high likelihood we might see a sustained rally because we have a positive divergence, lower lows on price, and then in this case, about even lows on the OBV. And so I thought that was very nice. to see. And then the scooter has been rising. And then what I really try and pay a lot of attention to these days is relative strength. This tells me how the industry group is doing against the S&P. And as you can see, it is rising, meaning it's got relative strength. The home builders do. You can see that DR Horton is also showing relative strength against the S&P. And then looking at DR Horton amongst its industry group, you can see that it is showing some relative strength. Before I go, just let you know, if you want to try out DecisonPoint, you can use the coupon code DPTrial and you will get our bundle for free for 1 week. So come try us out. And that has been all I have for you. This again is Erin Swenlin from DecisonPoint.com. Have a great week and happy trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.